Since receiving a full banking license from the ECB as of December 2021, Revolut are now able to offer instant personal loans to customers with additional banking services such as credit cards likely to follow very soon.
Additionally, deposits held in Revolut are now guaranteed deposit protection of up to €100,000 per user, a move that brings them on par with banks such as AIB and Bank of Ireland in Ireland.
At the time of recording, this offering is still being rolled out, so if you don't yet have access and are interested, you can join the waitlist via the Revolut app. Or by the time you watch this, loans may have been rolled out to everyone.
But is taking out a personal loan with Revolut a good idea?
Let's find out. With the introduction of personal loans, Revolut customers can, within a matter of minutes, apply and receive a loan of between €2,000 and €30,000 directly into their Revolut account. The rate they're currently offering starts from 5.99% APR, but is 5.99% actually any good? Let's take a look at an example.
Let's say you want to take out a €5,000 loan to be repaid over a period of 3 years. If we assume a variable interest rate of 5.99% APR, you would need to make a total of 36 monthly repayments to repay your loan, with each installment being approximately €151. At the end of the 3 years, the total amount repaid would come to €5,461, which is the €5,000 you borrowed and the €461 in accumulated interest. The good news is that Revolut say there are no additional fees apart from the interest and no fee for early repayment should you clear the loan.
So basically, the cost to you of borrowing €5,000 is €461. As a benchmark, we did a comparison with some of the leading banks in Ireland. But do keep in mind that 1, these interest rates may have changed by the time you watch this video, and 2, if you're watching this video from outside of Ireland, you'll need to double check the interest rates for the banks in your country. According to bonkers.ie, Ireland's leading comparison and switching website, this same €5,000 loan on a 3-year term would cost you €5,661 with Bank of Ireland or €5,694 with AIB or KBC. The difference in the percentage rate will lead to an increase of €200 if you borrow from Bank of Ireland and €233 extra if you borrow from AIB or KBC. This covers the major Irish banks, but with KBC withdrawing from the Irish market and the other lenders in Ireland coming in at an even higher interest rate, we can see that Revolut are coming in with quite a competitive offering. So this is probably a good moment to clarify that this video is not sponsored by Revolut, although myself and Cian are both happy Revolut customers.
However, for most viewers, you most likely have your Revolut account and have a main bank account, and you just use Revolut for things like spending, traveling, etc.
But with the new deposit guarantee of €100,000 and the existing features that Revolut offers, we would imagine many will start looking to consider Revolut as a potential main banking alternative.
And if something like, say, mortgage lending comes in, this could be a serious game changer.
We would imagine that there are some serious conversations happening at AIB and Bank of Ireland. In addition to the competitive interest rate that Revolut are offering, the big pitch here is how easy it is to get a loan. Easy as in a couple of minutes easy. To get started, choose the amount you wish to borrow, choose the loan term, currently between 1 and 5 years, answer a short questionnaire and submit your application. Revolut will then offer you terms based on the info that you provide. It is worth mentioning that the terms that Revolut offer you may be different to what you apply for, as they will take a look at your lending credibility. According to Revolut, every applicant should be able to provide a history of their monthly net income, which should be a minimum of the last 3 months. If you have your salary payments already directed to your Revolut account, then that's pretty much automatic. But if not, Revolut does have a functionality that allows you to have an open banking connection from your main bank to your Revolut account, and this will enable the background check for your income. This currently applies to all banks in Ireland except for KBC and credit unions. If you hold an account with either of these institutions, you will not currently be able to apply for a personal loan from Revolut. To clarify, most viewers will likely already have their bank card linked to their Revolut account, but this is not the same for what you need to do here. You'll actually need to go into your Revolut settings and link your bank account directly, which will allow Revolut to pull information such as your overall balance and your transaction history directly into the Revolut app. Your income must be of a sustainable amount to meet your repayment requirements after taking your monthly expenses and existing financial obligations into account. Revolut will also check your credit history and how you have managed your credit obligations in the past.
So, Revolut Loans, a good idea or a bad idea? Well, it kind of depends on who you are as a person and what kind of handle you have on your personal finances.
If you're a diligent saver and good at budgeting, then there's no reason why you shouldn't be able to apply for a personal loan. Maybe you want to buy a car, or do some home improvements and need some extra liquidity in order to make this happen, then perhaps a personal loan might be suitable.
However, if you're going to take out a loan and pump it all into Shiba Inu, try and make a quick win and pay off your loan with those gains, then you're getting into way dicier territory.
As we've mentioned in our other videos, borrowing to invest can magnify your gains, but it can also magnify your losses. Firstly, keep in mind that if you invest in stocks or crypto, there is absolutely no guarantee that you will make the same amount in your return that you've paid for the interest on your loan. Nor is it guaranteed that you will make any profit whatsoever. Once those funds are invested, you do run the risk of losing part, if not all, of that invested capital. Secondly, once you've invested those funds, it means that those funds are now tied up in the stocks or crypto that you've bought and is no longer sitting in cash in your account. And if these funds are not available to make your monthly repayments, you will have to fund your obligations from other sources. Loan repayments usually have strict repayment schedules, so if you are about to make a payment and you don't have the funds, you may be forced to sell your stocks or crypto at a very bad time in order to make these payments.
But what about payment and fees on any missed payment? If you are in arrears, Revolut will continue to charge interest at the interest rate of the loan on any overdue amount. But they do say that they will not charge any fees on your loan for entering arrears, will not charge any late payment fee, and will not charge surcharge interest. Although you may not get charged any additional fees for missing a repayment, this may affect your credit rating and thus may affect your ability to get credit in the future and potentially cost more. You can cancel your loan within 14 days without incurring any additional fees. However, it wasn't clear to us if you cancel your loan after 14 days, what the fees would be. But of course, if you cancel, any funds and interest that are due are still due to Revolut. And finally, if you wish to, you can take out more than one loan at a time. Whether this is wise is up to you.
If legacy banks don't start tweaking their offerings to compete with Revolut, we would imagine the writing could be on the wall for many of them.
We would strongly consider moving a lot of our banking services to Revolut if the opportunity arose, but we'll be keeping an eye on how things develop.
And if you want to keep an eye on us, make sure to subscribe to the channel. And as always, if you have any questions at all, leave them down below.
Thanks for watching, and we'll see you in the next one. How about, let's find out.
Let's find out.
When you start speaking, let's just go back. And then,
Okay, so let's find out.
Yeah.
Yeah?